years from now, none of us will have a job. 10 years from now, we'll all be jobless, but in a positive way.
Hi all, a very warm welcome on Aulium. Again, Markus, a pleasure to share that moment with you one more time.
Yeah, always good to be back.
So today we are with Augustin from OVNI Capital. Super happy to have you with us, Augustin.
Thank you for having me. It's a pleasure to be with you guys today.
So today, but we are going to talk about your journey about OVNI. So you have a journey that started in finance, you set up your own business and your own venture, you raised funds for it. Then that was in Mexico. Then you came back in France.
We're going to go all the way back to Mexico. All right. Okay.
You came back to France. You started working for VC in France. And a few years ago, you set up OVNI, focusing on deep tech with a very specific philosophy and strategy. So, I mean, we can't wait to hear more about that. But really, to start the discussion, do you think you could describe maybe the genesis of OVNI and maybe explaining why the market needed one more venture capital firm? One could think that there are a lot already. So yeah, what sparked essentially
I love this very tree to start a business from. The short answer to this, I mean, there's definitely different answers. I mean, different points. The first one is, as you mentioned, I started a business in Mexico. Then I went to work for a VC. I really wanted to start my own firm at some point. So one, it's an entrepreneurial project, So it wasn't like why another VC. Is like, I want to start my own fund. I want to start my own venture. The second one is, and I think it's more answering your questions, is our thesis is very unique in Europe. Unique. I mean, there's definitely other funds that do what we do, but at least in France, we were the first one to do it. And I'll try to answer in a few words. Is we invest in European deep tech that want to scale to the US day one. And the truth is that you look at different French funds, and there's a lot of great French funds. No one does that. And I'm not saying my thesis is better than their thesis. It's just a different thesis. So that was the answer. When people said, why another VC fund? We said, look, the world of SaaS, e-commerce marketplaces is gone. There's this new world of deep tech. There's not a single French fund that really does this with this mindset of, I want to invest in French businesses that go international day one. And again, I say France because we started in France, but we invest in anywhere in Europe. We invest in the US. We would invest in Israel if something comes up. But we started in France, out of Paris. So that's why we started. Is that a good short answer?
Good enough. I would definitely invest based on that.
It's a good point because a lot of funds were like, look, why are you guys starting? Why not the VC? What are you guys going to do differently? And the truth is VC firms, get a bad rep because it takes so long to return money. And a lot of times it doesn't return a lot of money. And so that question, we got it every single meeting. How are you guys? And I think the investors appreciated the fact that, yeah, we're a bit different. We're doing European deep tech, scaling to the US. They haven't heard this. And the second thing is they liked the fact that they were meeting entrepreneurs. Arnaud and myself, we were the two entrepreneurs of this venture. And I think they liked a lot of people say, when you raise your fund one, it's on personal intuition. It's on, do you like the founders? And the truth is, we have 200 LPs. I think 100 invested because of our thesis, 100 invested because of Arnaud and I. Or at least 200 invested because of Arnaud and I, 100 invested on the thesis.
Okay, no, makes sense. So really new venture. I mean, new projects. I mean, like from the outside, I mean, we only see your success so far, and I'm sure like the journey was somewhat complicated, or at least had a few bumps. Can you maybe elaborate, on the journey? I mean, from an entrepreneur point of view, you tend to think that VCs are all powerful, they have the money, they float on some sort of cloud, etc. But the reality is, I believe, quite different. Like raising funds is very hard. So I mean, how did you live this, essentially that journey? I mean, from the moment when you were with Arnaud and say, okay, let's start our own shop, what happened afterwards?
Yeah, sure. And you know what? I've lost a lot of hair. It is a tough journey. I see you with, head full. So, I'm a bit jealous. The reason we started this 4 years ago. 4 years ago, Arnaud and I said, you know what? We want to start our own fund. We want to make our own investment. We want to create our own culture, hire our own people and create I think you don't see in Europe yet. It's coming. Funds that live beyond the career of their founders. A lot of funds, there's a lot of issues when it comes down to passing on the assets from the old GPs to the young GP. And I think Arnaud and I, we had this experience a bit with our previous employers. Great funds, great returns, but it was tough to project ourselves at the top. And so Arnaud and I 4 years ago said, you know what, we're going to start our own fund, and we're going to keep in mind, we want to be able to transfer this asset we're going to create to someone else. And so, it is an entrepreneurial project. You quit your job. By the way, to raise a fund, you need to create a company, and then this company needs to get a management agreement. And to get a management agreement, you need to raise money. And so we actually had to raise money on OVNI Capital. Arnaud and I put about 200,000 euros. The rest came from angel investors who believed in us. So we had a valuation on a company that didn't do anything, didn't even have a management company, a management license. 6 months later, we got the management license. And then as soon as we got it, we launched a fundraise. And it took us 2.5 years to raise 60 million. I would say we've met 1,000 people, of which 200 invested. But meeting 1,000 people, and a lot of it, you don't raise on a video call. You raise because you've called a person, you've met with them, you've called them again, you've met with them. And honestly, if you get a commit after 2 meetings, we're lucky. Most commit were after 2, 3, 4, 5 meetings.
I mean, 1,000 people, how long did that take? Because, 1,000 people, you meet, let's say, 3 a day, on average.
We were 2 over 2.5 years.
Right.
So if you think about it, it doesn't come down to that many a day, but it's tough to get a qualified. I mean, it's not like it's like every entrepreneur with their own business. Our clients are what? Our clients are people who can invest at least 100,000 euros in our business. They are a lot, but they're not that many. And you need to be, you don't want to call every single person. You got to call and be like, okay, if I'm going to spend 30 minutes, an hour of my time with this person, I need to qualify it at least a little bit. And so to get 1,000, 2.5 years, it's a challenge. It is a challenge. So, it comes down to what? One every other day per partner. But it's a lot of work to find that person.
Your flight routes must have been crazy.
My what?
The flight routes. You must have had a good travel agent. Yeah.
You know what? It's a good mention, because we focused a lot the fundraise on France initially. The truth is, even the name OVNI, it's something that I think is important for entrepreneurs. Is the name OVNI? To someone who knows what it means, it's very French, right?
Yeah.
And so a lot of people said, you shouldn't be named OVNI. You should be named UFO. You should be named something more English, more international. The truth is, we were in survival mode. What is survival mode? Let's first fundraise. We'll figure out later what we want to name the company, where OVNI sounds good in French. Let's raise. And, what you said, Markus, is we travel a lot all over France. We travel to Toulouse, to Bordeaux, to Lyon, to Marseille. We went to see LPs. No one else in Paris had come to see them. There's a lot of money in Lille. There's a lot of money in Grenoble. Grenoble. And the truth is, a lot of people we met there, they were like, "Oh, it's funny. You're the first Parisian fund who's coming to see us." So yes, we had a lot of travels. The truth is, it was always by train. Honestly, in France, I can't remember if we ever take the plane to go somewhere in France. That's the beauty of fundraising in France. I'm not saying that's a strategy for Fund 2. The Fund 2 is clearly going to be a fund that's pan-European with LPs all over Europe. And at the end of the day, we raised 60 million. 85% comes from French LPs, 15% come from British, Belgian, Luxembourg, Swiss, Italian, and Portugal, I think. So it was, it's funny. It was tough. It was tough fundraising. We went from 5 million to 8 million to 13 million to 20 million to 28 million just to grind. But it's funny because you think it's the hardest part of your job, and then the hardest part is actually investing in, or, making sure the entrepreneurs you want to invest in accept your money. And you're like, all right, it was hard. It wasn't that hard. The hardest part now is convincing the right entrepreneurs to let us invest. So, people think of VCs, as you said, Thomas, as like super powerful, the most powerful. We're very vulnerable. I mean, we were very vulnerable. We're still very vulnerable. I think we were able to invest. We've made 18 investments. I think we were able to invest in some of the most competitive deals I've ever seen in my career. And one of the reasons why we won, probably the most important reason why we won, is because across from the entrepreneurs, we're also entrepreneurs. Like, so we did a deal, and there was Lightspeed, there was Anderson Horowitz. They chose Lightspeed, they chose Anderson Horowitz, but they also chose us. Why? Because they knew the guy from some of these funds might not be there for the next 10 to 15 years, but that we would be there for the next 15 years.
And so like on the fundraising, I mean, it lasted 2 years, but you also need to show something to it to essentially the LPs, like putting money, so they want to see some sort of a pipeline and potential opportunities. How do you essentially reconcile the two? Because you can start building a pipeline, you have a few opportunities in your hands, but then you don't necessarily have the money. So what do you tell the entrepreneur at that point? You say, we'll get back to you tomorrow once we have the money, but at the same time, like, the opportunity goes. So what do you tell the essentially potential LP at the same time? I mean, is it like a game of fake it until you make it, as they say? Or?
100%. It's a game of it's a game of, you raise 5 million. Okay, let's try to invest a bit. You go to 8 million. Look, we've made 2 investments. 13, we made 3 investments. And it's true that it was easier as we made more investment to convince LPs. They were like, okay, those guys are actually investing. But I'm always amazed. You're asking me this question. I meet a lot of VCs, and they're like, no, our first close was our final close. And I'm like, your final close was, but I think it happens in fund 3, fund 4, fund 5. Fund 1, I think everyone did what we did.
I mean, for sure, there is also an element of luck. I mean, maybe you find a massive LP that essentially is your anchor LP, making.
We did not find this anchor LP. Everyone around us was like, oh yeah, I raised 25 million, 10 of which comes from this anchor LP. We didn't have a single, until our biggest LP put 15 million. So it's a quarter of the fund. He was the last one to sign an investment agreement. The last one. I wish, you know what? Maybe I don't wish, because if he had been the first one, we probably wouldn't have worked as hard to get to 60 million. It made us just so hungry. I mean, we were hungry. And the truth is, for the first 2 years, Arno and I couldn't pay ourselves. We didn't, the business of a fund, you charge 2% of AUM. I mean, 10 million fund, you're going to charge 200,000. You have to pay, the accountant, you have to pay the regulatory fees. You have to pay the analyst. You have to pay the lawyers. I mean, you just can't pay yourself. And I think I like how this.
It's like, I think people like forget about this a lot. Like, like, it is like a journey in itself. Like, it's not easy. I mean, except maybe if you are like a mega fund and you are the place. Yeah, you are the place where if you want to deploy money, you need to knock at their door, and then maybe they take you in. But at the beginning, it's I think it's quite hardcore. I mean, the way you described it, I mean, I don't think it's very much different from another type of venture, to be honest. Yeah. So you said, like, so you focus on deep tech. I mean, what does that mean, deep tech?
I love this, because even deep tech is a buzzword. It doesn't mean anything. And it's funny because when we started and we said we're, deep tech fund, deep tech kind of had a negative connotation, because deep tech sounds like it's going to take 15 to 20 years and it's never going to return money. Nowadays, deep tech is widely accepted and people are like, okay, I'm a deep tech fund, blah, blah, blah. The way we defined it initially, we only invest in tech-centric product. So there's an innovative technology at the core of the product we're investing in. There's something that gives me an advantage, an R&D advantage that's at the core of the product the entrepreneurs I'm investing in are developing. And so what does that mean? That means anything semiconductors, quantum, energy, healthcare, cyber. But again, cyber, but there is I'm not going to invest in a SaaS. I'm not going to invest in a marketplace. I'm not going to invest in any e-commerce. I'm going to invest in, there's been applied science. There's been research, so applied science, proven physically. Okay, how do we put this on market? How do we do it to go to market?
Okay, so it's a space where it's a company that did some research, essentially, but it's not like pure R&D. So you're not putting money with teams that says, okay, we need 5 years to essentially come up with something.
I think VCs are terrible at financing R&D. If a VC starts financing R&D, he's not doing his job. A VC should be looking at what are some results from research. I think this could make sense. Let me put 5 million to try to see if they're clients. I think that's what VCs are for. R&D, I mean, it's so risky. It's for grants, corporate, but it's not. I mean, I don't think, or it's a VC that gets public money. It's public money.
And so, like on that note, talking about like time horizon, where do you see OVNI in 10 years' time? What's essentially your goal and your dream?
So there's two ways. I think two paths for VCs, right? There's the path of I become an AUM aggregator. I excel at fundraising. I raised 2 to 5 billion, and honestly, I'm going to become super rich just collecting the fees on the AUM. And the truth is, there's lots of funds who assume this positioning. They're very successful, but they stop becoming investors. They become just AUM managers. They become LP relationship managers. I love my job. I love my job of investing in deep tech startups. We invest in like the craziest stuff that if it works, if it happens, is going to change parts of society. And I don't want that to change. I really want to be able to keep investing as the company grows. And so I think the path we're heading towards is 10 years from now. So if you probably have raised, hopefully $500 million to $1 billion in smaller funds, but small team, and really focused on how do we return 4x, 5x those funds, and how do we become rich? We become rich because we actually get a percentage of the upside of the funds the IRR. And so that's the way I see myself. 10 years from now, look, 600. The first one was 60 million. I hope the second fund is 80 million. I do not want to raise funds bigger than 100 million. I think it just doesn't make sense for what I'm doing. Seed in Europe, even if there's two funds for us, which are kind of our North Stars. They're Hummingbird and Blue Yard. And you can also put in there, guys like Oxton, Local Globe, but those are the funds I really love. And if you look at it today, the biggest funds they raised, I think it's closer to 200 million. 200 million is a big size. So anyways, long answer to your question. I want, this job is a craft, and it's an art, it's a craft. I want to keep it that way. I don't want to become this massive aggregator managing 50, 100 people.
Okay, so maybe being like some sort of devil advocate here. So if you essentially look at the broader market and the sort of macro trends that could be opportunities or challenges for your specific business, which is an investment firm, and you see like some sort of early days of consolidations within like the private equity world as a whole. And if you look at private equity, in some way, basically it's asset management. And in asset management, size matters a lot. So the bigger, essentially, you are, maybe the more attractive you could be to LPs, telling them, look, we don't need your 2% a year anymore. Maybe we do some sort of a discount. Maybe we don't take that much carried or, bonus on success. And the more diversified you are, the more options you can provide to your essentially clients. You want like an infra strategy, you want an early stage strategy, you want a private equity mid cap in a random place. We have it. So how do you see yourself within maybe that sort of macro trends?
I see myself as not attracting those LPs who are interested in investing in those big platforms. I think we offer something a lot more exciting and a lot more interesting. But again, I'm not saying it's better, just saying it's different. So, it's one of the reasons why it's so tough for us to fundraise, because we don't fit the check marks of these big LPs who want to invest 100 million in this infra fund, 50 million in this fund. Sorry, Markus, you raised your hand.
Yeah. So, and just, I mean, I was wondering, you mentioned you're quite selective about your LPs as well, and who you bring in, right? Or would you say that's an important part of the strategy?
Being selective about the LPs?
Yeah.
I mean, I'm saying this a bit in a naughty way, right? If an LP says I want to invest in my fund, I'm not going to say, no, you can't invest. But I think it's a dual selectivity. Like, I know some funds are not I know some LPs are not interested in what I do. And so I don't even bother talking to them. I guess it's more in that sense that I meant it.
Yeah, yeah. No, absolutely. And in terms of your journey before, so would you mind taking us through your journey that took you to this point? I'm sure it's
How did I
a
become
very interesting one for people to
yeah,
understand.
yeah, sure. Look, I'll try to. Initially, so I was born in France. I was actually raised in the U.S. It's where I met Thomas, by the way, in New York, for probably 20
Good
years ago
old
now.
times.
But a good time. I started my career in M&A. So I went to middle school, high school, university in the U.S. And I started my career in M&A in New York. And what happened is a buddy of mine from school said, "Hey, I'm starting a business. Do you want to invest in this business?" And I said, sure, let me give you a small check to start your business. And that was 2009. And the funny thing is, I started helping my friend with, his financial projection, his deck. I even helped him with the actual product. And a few months later, he raised a seed or Series A, whatever you could call it back in the days. And I saw my check, triple. And I kept on my very financial New York journey of going from to private equity. I even worked at a hedge fund. But at the same time, I kept every year systematically investing business angel tickets in 1-2 companies. Initially, it was friends of my friends, and then it was just people who had heard about me. And this led to a journey, professional journey, where in 2017, well, I typically, skip Mexico, but since Thomas mentioned it, I'll mention it. It led to a journey where in 2015, I stopped my, hedge fund career. Honestly, I didn't really love it. I don't think I was actually that good at it. And I wanted to work in something I was passionate about. If you're going to be successful, you need to be passionate about what you do. Money will come later. That's been my philosophy. And in 2015, I said, you know what? I've been investing for 6 years. I used to be a banker and private equity investors. I'm going to know how to build a company. I'm going to be a great entrepreneur. That was my thought, right? That was my hypothesis. And I moved to Mexico to meet a friend from New York, and we started a phone repair business. We raised probably 2 million. We opened 25 stores all over Mexico. And the truth is, it was a disaster. We went from 0 to 80 employees in 1 year. We went from 0 to a few million in revenue in 1 year. I had no idea what I was doing. Nothing. Hiring was terrible. We couldn't put processes in place. And the truth is, the company went up super quickly and went down just as fast.
I was about to say, it sounds like good problems to have.
Yeah. It was a great learning. I was like, okay, being an entrepreneur is just a job in itself. It's very different. I lost a lot of money, personal money. I had put probably all my savings in that company, and in 2 years it was gone. And it brought me back down to earth. And I told myself, you know what? I like investing a lot more than I like starting something from scratch. And so I went to, and my last realization was I was 32 years old, 8 years ago. And I said, I want to become I used to be a business angel. That's what I loved the most in my previous jobs. Let me try to become a full-time business angel. And so that's when I joined this fund called OVNI Capital, which is a transatlantic VC firm, seed. They're based in Paris and San Francisco. And what I loved about them is they told me, look, you can join us. You have 6 months to find a deal, and you can invest your own money on every deal you bring to the company. Meaning, like, you're going to be our employee. You're going to help us deploy this fund. And if you want, you can keep investing your own money. And I love that. I love that because I felt like it aligned my interests with those with the LPs. And so I stayed, I think 4 or 5 years at New Fund. No, 5 years at New Fund. I invested in 25. I invested in the fund, in New Fund, and I also invested in the 25 deals I led with them. And I had an amazing experience. I made a name. I mean, you guys are immigrants too. If you're right, Markus, you're based in London.
Yeah. But I'm from Germany.
I know. So you guys, so we're all immigrants here, right? I mean, you guys are in a country that's not the country you grew up in. And the truth is, when I came to France, I had this very immigrant grit. I didn't know anyone. My family had moved back to France back then, but I didn't have any friends from school. I didn't go to school there. I didn't have any friends from university. I didn't go to university. And so I think I really worked twice as hard to make a name for myself. Like literally, I was this like nobody seed investor. And I just try to go on TV. I try to go on the radio. I try to write articles. I try to go on podcasts.
It's a success. It's a success. I mean, I see you on TV like every week now, like on BFN TV.
I try to go
last time.
I'll tell you, it might be a funny story for you guys. Literally, I'm in France for 2 months, 2017. My old boss tells me, hey, man, one day he comes up to me. He's like, hey, man, we have an invitation to go on BFM, like the local, the business TV station in France. And he said, X doesn't want to go. Y doesn't want to go. Z doesn't want to go. And they look at me and they said, do you want to go? And I was like, damn, yeah, I want to go. This is amazing. I've been waiting for this. And in my mind, it wasn't just going on TV. It was like, I need to make a name for myself. And so, I was so freaking nervous when I went on TV for the first time in my life in November 2017, I'd say. I texted my parents. I said, guys, I'm on TV. You better check in. And what I did, which I think is also my personality, I became friends with the casting director. And I told her, I was like, look, this was an amazing exercise. Can I come back? And I came back in December, and I came back in January, and I came back in February. And it's been 8 years. I've been coming back probably once to twice a month on their TV show. Obviously, completely changed now. It's not the same director. It's not the same anchor. And so going back to Markus' question, I mean, I just worked so hard to make a name for myself. Eventually, it came down to, I've made some great investment. I've built a name for myself. I want to start my own VC firm. And, I met Arnaud around the time I moved to France because Arnaud also had an incubator. As an investor, I needed to know all the incubators in France to see if there was any companies I could refinance. And we became friends. We started running together. He loves running. I like running. Notice I didn't say I love. I said I like. And that was my previous life. And so I've been in France for 8 years. Prior to that, I was in Mexico, and before that, I'd spent most of my life in New York. And I'm actually moving back to the US in a few weeks.
Yeah, maybe can you explain maybe on this, like the sort of Europe versus or with the US? I mean, you've lived in the US for a long time. So, I mean, my first question is, when you wanted to become like a professional VC, an investor in that space, why did you choose France versus the US? Because one would imagine that the US, I mean, from what we hear, is maybe like a better place to start something like this. And then, maybe on the two ecosystems, I mean, you must know very well now, like how do you compare the two? I mean, how maybe complementary they are. I mean, I've watched like a video like recently of Andreessen Horowitz, where they were all laughing about Europe and the bureaucracy and everything. And if you wanted to build a business, I mean, the last place you should choose was Europe. So what's your take on this? I mean, you invest in companies in Europe, but bridging them to the US.
Thomas, I got to say, I love your question. The first question, the question that says, why did you move to Europe? Because it's you're right. You're 100% right. Why the hell did I move from, North America to Europe to join the VC firm? And I'll tell you something, it's not confidential. I've actually shared it once on a podcast before. I moved to Europe initially for lack of confidence. I moved to Europe because I didn't think I could find a tier 1 VC to work for in the US with my previous experience. Honestly, that's the number one reason. Like if I was going to play this game, I wanted to play for PSG, and of the PSG of the league I'm in, right? And I thought in the US, I wasn't going to join PSG. I was going to join Bastia, or sorry if there's anyone from Corsica. I don't know what's the equivalent in England. I wanted to join United or City, and I wasn't able to. And so in my mind, I said, I'm actually French. I've been a business angel.
I like it. I'm actually French. I
No,
realized that's true. I'm French.
and the Macron had just gotten elected. And, to me, as someone who grew up abroad, Macron kind of inspired this like business renaissance in France. Like, okay, finally someone who's going to be pro-business in France. And I said, there's a way I can market myself in France to join the PSG of France and VCs. And that was the mindset. That was, okay, let me join the PSG of France, or, one of the best teams in France. And we'll see later. I'll show them that I can become a full-time VC, and we'll see later. Had I stayed in New York or gone back to New York, I don't think I would have been on TV 2 months later. I don't think I would have gotten the grit that defined me or defined my first years in France. And so I like this question because I could give you the bullshit answer. Like, oh yeah, France is an amazing country. It was the perfect time to market. No, it's bullshit. I came to France because it was a mix of, good political climate and the fact that I don't think I could have gone better in the US. And to answer your second question, I'm convinced that unfortunately Europe doesn't have a unified market and will never be able to beat the Americans or the Israelis on certain startup plays. And which plays are these? SaaS, e-commerce. I really believe the only way for us to, I'm not trying to beat the Americans or beat the Israelis, but at least compete with them, is on something that Europe is good at, is R&D, innovation, research. What are we not good at? Intrinsically, is we don't have a unified market, and there's way too much taxes on capital in Europe to have a lot of capital. And so my mind was very simple. It was like, Europe is good at what? Applied science, research, R&D. Okay, let's find those little nuggets and then let's send them to the US. It's like biotech, right? Biotech, I think a lot of successful European biotech, they start in Europe, they all leave to the US. And so, a lot of people say, what about the thesis? Honestly, to me, it's just a natural thesis. If we want to make money, the drive is not just to make money, but the drive is to create generational companies. But if we want to create generational companies, make money for investors, make money for the employees of our startups, for me, it was just the only and natural way to do it. So yes, the US market is a lot more powerful. Yes, the US market, more money, more entrepreneurs, more exits. But I'm not trying to compete with the Americans. I'm trying to find this niche of European deep tech in the US. And so that's why also, to answer your earlier question, is do I see myself as a $5 billion fund? With my current thesis, no. But with this thesis, I think I can easily be a 500 million, 700 million fund that repeats this every 4 to 7 years.
So, essentially, the bottom line is like the two are complementary for you. You find like the great companies, and you essentially help them to open on a much larger market, more unified, etc., etc.
Yeah, had I been, had I stayed in New York, had I been, worked in a VC in New York, it probably would have been better San Francisco. But anyways, I wouldn't have given the light of day to Europe. It's just that I'm based here. I'm not going to shit on Europe. We have something good here. How do you make the most of it?
Yeah, makes sense. And so interestingly, so you put Israel on the same side as the US, but Israel is a tiny country. So why do you put?
I put them in, well, because it's kind of the 51st state of the United States, tech-wise. And I think, I put them because they're the most successful location after California. But what's the mindset of Israel? Is such a tiny country. It's probably 10 million people. And so a lot of the startups there, they don't even cater to the local market. they cater to the US. And so they've had this obsession for 20 years to a point now where a lot of those Americans unicorns are Israeli company. And so when you're an Israeli startup, you have access to this local ecosystem that's just massive. And so there's a lot of money there. Everyone is focused on going to the US. I mean, I think it's a good curse of a small country. I think you see similar mindset in countries like Sweden, for example. Sweden is giving you Spotify, Lovable. There's a lot of startup coming out of Sweden. Why? The country is so small, they don't even cater to the local market. You see that a bit with Netherlands. The problem with a country like France or Germany or UK is each country is about 70 to 80 million people. They think that size is enough to produce unicorns. And so a lot of times you end up building very German or very English, very French businesses that just don't scale and don't achieve those valuations. I think England is lucky because they speak English. And so naturally, their products cater more to the world, but it's still this mindset, but it's changing. It's definitely changing. I mean, compared to, I came to Europe in 2017. Investors pushed entrepreneurs to say, first win your local market and then expand internationally. It's flipped now. It's like, do not focus on your home market, focused on the US, focus on the world.
And then also you had some experience in Mexico as well. So we've mentioned the US and we've mentioned Europe, but what was the system like there, just out of interest, in terms of the raising?
It was too tough. It's a good point. I came to Mexico in 2015, hoping that this would be, there's a growing middle class. I mean, it was a 120 million country. That's 130 million. They were adding 1 million people every year. And so you're seeing this like growth in wealth. You're seeing this growth in population. You're like, okay, this must go in the same direction. But the truth is, it was so, we raised 2 million. It was just so hard to raise in Mexico. People just don't try. There's still a massive distrust from institutional investor in emerging markets. And so the truth is in Mexico, and one question too I had in Mexico is, who do you sell to? There's no M&A market in Mexico. You don't sell to anyone. And so I was like, okay, I'm going to struggle to raise money. And even if I'm successful, I'm going to struggle to sell my company. Truth is, company failed before I could even think of fundraising or selling it. But to your question with maybe, is there a world where I could invest there? At the moment, not really. Because again, I'm so focused on Series A funds reinvesting in my company. I'm so focused on who's going to buy those companies. And there's no really movement towards positive developments in Mexico in that respect.
So I mean, you mentioned like exit, like I think you quickly mentioned the fact that you're already thinking about exit when you invest at such an early stage. It's really something which is part of your. I know like private equity investors are always thinking about their options when they invest. Well, it's a different sort of stage, etc. But is it something you've sort of inherited from your private equity days? When you look at an investment opportunity, I mean, are you trying to think about, okay, what are going to be my options in the next 5 to 10 years?
I need to have the conviction on, can this company be worth $1 billion, $2 billion, $3 billion? I think you've probably heard this from VCs, right? I need to have
first time.
I need to have a conviction on who can buy the company. Is there a world? And I mean, what's the job of a seed fund? What's the job of a pre-seed fund? To get strong convictions on what the world could look like 10 years from now. And so, so once you kind of get that conviction on different theses, is in this world, are there players who can buy my company 3, 4, 5 billion? And I just don't see in my industries, which are deep tech industries that we mentioned earlier, any world where Mexico produces those big M&A players that will acquire those companies. Mexico will be amazing at producing other stuff, but I don't see them in semiconductor, photonics, healthcare maybe, but I wouldn't depend on it. So that's kind of the way we think. And the truth is, there's definitely a concentration of. I mean, photonics, quantum are such complicated subject that there's concentration of talents.
I mean, I don't know what this is. So maybe after you could explain what photonics means. The first time I hear this.
Photonics is this idea that, I mean, you guys remember DSL internet, where basically you had internet on copper wires, and then it turned into fiber internet, where internet is actually transmitted by light. I'm simplifying it. This technology has gone so small that it's coming onto our computers and onto our cell phones eventually. So right now, if you open your computer, if you open your phone, it's just a bunch of copper wire. In the future, it'll just be light. Like you won't see the light necessarily. That's photonics. That's the world that eventually everything is going to switch to light-based communication. So that's why I'm saying photonics. Yeah, it's one of the hot fields these days. NVIDIA talked about it last week. We've actually only made one investment in that space, but it's definitely a space we love. We've made an investment in a company called Encodin, Ncodin, and the company is based in France. French-Italian founders, and they're actually moving to San Francisco because some of their clients are based in the US. It's exactly the type of companies, it's exactly the type of plays where we see Europe, can build champions.
And so sorry, so for example, on that specific investment, I mean, how do you run some form of due diligence? Because it sounds like, deep tech, etc. I mean, it's required for like a fairly strong engineering knowledge is required. Well, I mean, you're 100 times, 1,000 times more trained than me. But I mean, if I were to meet those guys, they tell me, yeah, the future is light in your phone, and we do it, and I'll be like, great, okay. But I mean, how do you check if things are real?
A lot of LPs, they doubted. They said, you guys are not engineers. You'll never understand what we're investing. And to a certain extent, we don't understand everything of what we invest in. But the truth is, we'll never be expert like the founders will. Our job is not to be an expert like the founders. Our job is to understand the basic physical invention, technology. But the job of VC is what? Is to understand, again, get those conviction 10 years from now, and then get some pieces, and then realize, okay, is this the best team I'm meeting in this space right now? Is this a theme where Series A fund will put money in within 2 years? Is this a theme where big players like NVIDIA, are going to need this technology 5 to 7 years from now if they want to become relevant? That's the job of a VC. That's the conviction, the research we need to do. And so to answer your question, yes, we deep dive when we try to understand what photonics is. We really try to understand. I mean, it's a mix of ChatGPT, it's a mix of Google research, but it's also a mix of talking to the right experts. And people say, okay, great. How do you have access to experts? And this is where I think we got lucky. We have 200 LPs, as I mentioned earlier. We have 200 investors. Why we have 200 investors? Because we just struggled raising, We kept raising and raising and raising, and little by little. But those 200 investors, they represent about 250 people indirectly. We put them in a WhatsApp group, and we'll send them a message and say, look, we're looking at a photonics business. Does someone know anyone in photonics at NVIDIA? Does someone know anyone at ST Microelectronics in Grenoble that specialize in production of this specific chip? So we'll ask for 3-4 experts. We'll probably get like 5 to 6 investors. We'll say, I can introduce you to those 30 people. And that's the way we'll work. We'll try to talk to half of those 30 people. We'll try to connect them with the founders. And that's how we do diligence to businesses we invest in. And so this 200 LP, rock in their shoe in terms of, administration, in terms of, became such an advantage, a powerful advantage to invest in the most complicated businesses we've explored. I think it's become our competitive advantage, at least for the next 2 years. One of our next competitive advantage, we think, and I mentioned it earlier, but we didn't extend too much on it, is opening this office in San Francisco. But
okay. And so, yeah, so regarding sourcing, so you mentioned what the world is going to look like in 10 years time. So you really start macro, and then you just drill down to essentially understand the market. So that's what you do every day, essentially trying to. So how do you get the first hint? I mean, how did you photonics? How did you essentially thought about this? Like, because I mean, now
Photonics.
today, well, I'm not a VC. I'm not doing your job, so maybe that's somewhat normal. But I mean, I'd probably have a bit of trouble over the next few weeks to understand. Okay, what the future?
Look, so I mean, I'll give you a two-step answer. Photonics is future of computing, and so computing. I mean, if it's easy to see that computing is the future. I mean, computers are becoming everywhere, right? And so you sit down and you say, what does the future of computing looks like in 10 years? The future of computing looks like in 10 years, massive increase, explosion in data usage, data transmission. Okay. So data transmission, how do we fix that? Do we build more data center? There's different solutions to that, right? And one of the solutions is, well, you move to a photonics-based world where copper is, when you send information on copper, is one information is sent, then another one is sent. And light, you can sell multiple information at the same time. It's like a highway, right? And so I guess it doesn't quite answer your questions. Like, how do we get to this idea of photonics? The truth is, the VC investor is supposed to be reading a lot, is supposed to be meeting a lot of entrepreneurs, is supposed to meet a lot of other investors, is supposed to attend conferences. And I think that's the way you become smart, and you make yourself, and you build convictions in different theses. So it's a mix of both. It's okay, let's sit down, let's think of what the future looks like in computing, the future in healthcare, the future in geopolitics. I mean, look, if you look right now, it's geopolitics. What does the future of geopolitics look like? We can do the game together. It looks to me that it's become a very bipolar world, right? With the Western countries on one end, maybe plus India, and on the other end, countries like Russia, China, Iran. Okay, once you have this, you're going to have some cyber or defense, depending. Okay, future of cyber. So what does that mean and little by little, you build convictions on this. And one of the things I do to see whether I'm onto something. Once I get a conviction, I'll typically try to tell my friends or tell someone who's not familiar with my job. If he thinks it's freaking crazy, I'm onto something. And I'll tell you something like 4 years ago, and it's still a bit controversial, but I have a conviction that 10 years from now, we'll all become immortal. We'll all live forever. It is crazy, right? It is crazy. But there's a thesis there where, okay, there is definitely a world where we're not necessarily immortal, but we live till 120 years old, till 140 years old, in better shape, in better health. And I think that's a conviction we have deep down at OVNI. And so how do we make sure that more people live longer, healthier lives? And so we've made some investment in that space.
And so do you put maybe ethical issues in the equation? Because like talking about living forever, you might think, okay, is it really like for the greater good? Like same thing with AI. I mean, you could think, okay, AI is great, but why would
would
we
need
replace all those jobs, etc. in some way? Is it for the greater good, really?
at the end of the day, all the investment we try to make, we're not impact, but we have strong convictions that it's going to make the world just a better place for humans, for us, for end consumers. And I can answer all your questions. We probably would need a different podcast and talk for 2 hours. I'll give you some quick answers. I think there's a decline of birth rate all over the world. And if you don't do something about it within the next 15 to 20 years, our grandkids are going to live pretty atrocious times because you don't get growth with a declining population. You get wars. You don't get good news, basically. And at the same time, we're also entering a world where I have a conviction. The truth is, I'm having a hard time finding some good investment thesis around them. I found a few, but that 10 years from now, none of us will have a job. 10 years from now, we'll all be jobless, but in a positive way. And so if you have the conviction that 10 years from now, no one has a job, how do you invest in the world of post 10 years from now? And I've actually written some articles about it on what could that world look like. And
I'm curious to hear, because if you imagine that nobody is working, so nobody is producing, most of the production comes from machines. So what do you invest in at the end of the day?
Invest in the machines. You own the machines.
Okay, so but
And then you're going to
Is
have
it really for the
what about
greater good? Because I mean, let's say you're right, you invest in a machine, but to simplify the equation, you have a monopoly on those machines. I mean, you need to be like a very, very good person to essentially say, I'm redistributing some of the wealth, which wouldn't be monetary, which would be something else.
you're gonna need to share the production, the production, or else you're gonna have revolutions everywhere.
But the problem is like, how do you share? Because for sure, I mean, as good as I like to I like to think I am, I know that I will favor my family, my friends, etc. first. I assume you would do too, but maybe I'm wrong.
There's a,
I'm
I mean,
happy I'm in the second circle, at least.
I have a short answer for you. There's universal basic equity. Everyone will be required to own equity in those means of production. But I haven't answered that question. I haven't answered what the world would look like 15 years from now. I wish I knew.
It sounds definitely crazy. Being a friend telling you it's crazy, you should dig into that.
Yeah, because if you think that, but the truth is, I mean, there's going to be a societal like transformation. If you stop working, I mean, you're going to a world of leisure, and so maybe you should think of like, okay, what does the leisure world look like for everyone? What are we going to do every day we're going to go back to Roman times, I mean, Romans did not work. Only 5% of people worked. Slaves at the time. Now robots are going to work for us. So again, we could go on forever. This for me, it's a fascinating topic. I'll give you another example. It's a funny example. I don't know if you guys have seen the explosion of driverless cars. These past weeks, it's coming like crazy. It's coming like wildfire. And I was having dinner with my kids. My oldest is 8 years old, and I told my wife, I was like, I really think my kids will never have to drive. I really think my kids will never have a driver license. And my kid is only 8 years from being 16 years old. And I think in 8 years, it's gone. I mean, there's no more, there's no more cars with drivers. Maybe, and there'll be some exceptions, maybe I don't know.
This I found easier to believe.
Exactly. But because you're already seeing its impact. As a seed investor, I need to have convictions on stuff that none of us are seeing. If not, I'm not going to be a good investor. A good seed investor is making a good seed investor, 90% of its investment go to zero. And so if I'm telling you something that's too mainstream, I'm not taking enough risk. I'm not diversified. I'm not taking enough risk. And if I'm not taking enough risk, I'm not going to return 5x to my investors.
But on that note, I mean, wouldn't it be less risky to maybe take less risk with more companies that return 6, not 30x, but not 1 to returning 7x, and then you return the same essentially multiple, but at a lower risk?
There are funds who do that. I mean, there are a lot of funds who do that. I think, and I don't know if you'd call them like Series A fund, if you'd call them like not Corp Dev, capital development funds or small cap funds or whatever. But can I give you the answer? Is to me, intellectually, it's not as fun. Intellectually, I've always been fascinated by science. I'm not an engineer, but I've always been like, a geek. I've always tried to code. I've always tried to like tinker with my phone. I've always loved to make projections and see whether those projections play out. So honestly, what you just described, let's go back to what I said earlier. I think you need to be passionate about what you do. And honestly, I would not be passionate about those 6x multiples. I think it's just, to me, intellectually, it would just be boring.
Yeah, go big or go home.
Sorry? Well,
go big or go home.
Private equity for me is boring because, private equity is a lot about like, okay, I'm going to put this team. Okay, I'm looking at the finance. What can I lower the cost? I think, I'm not saying it's intellectually inferior. To me, it's not intellectually stimulating. I think a lot of people find it super interesting, and I'm sure it's intellectually, it is hard. But again, I'm in this space where truth is, I love my job. I love what I do, and I really work and I really wake up for these companies putting to market what they promised us they will, because I think that'll change the world. And I really believe in this. And I really see a world where there's just, it might sound stupid, but there's just, people just live healthier, longer, more prosperous lives. You know, I don't believe in the big state. I live in the smallest state possible, the better for all of us. I really feel like I'm a defender of like the end humans. I haven't theorized on this, but it's because you're asking me.
I just wanted to jump in a little bit about the deals and how you source them, you know, at this stage. You mentioned the word conviction a lot, and yeah, we've heard it, you know, a lot as well. So it's a very common thing that you get. What really do you think is that drives you, the conviction at that stage when it's, you know, you've got very little data and you've ultimately, is it the founders? Is it like the vision? And you were mentioning, okay, maybe it's a crazy idea that's big enough and you've got enough risk. Is there any secret sauce that you look for?
No secret sauce. So the way we typically find deals is we source them. I think we've become to a world where it's so competitive.
Yeah.
You got to be
Right.
the first one to meet the entrepreneurs. You got to find them on LinkedIn. You got to find them at conferences. You got to find them through your LPs. Honestly, I don't think I've ever done a good deal where the founder emailed me. And I hope I'm wrong, because of the 18 deals I've did with this fund, one, you know, emailed me. So I'm hoping this guy will be the exception. How do I get conviction? I think it's definitely, it has to be part of the thesis that I mentioned, you know, all those thesis convictions that, you know, the thesis but I guess to my second point is, as pre-seed seed, we invest in the entrepreneurs first and foremost. Honestly, it's probably 80% of what we invest in. Do I like the entrepreneurs I have in front of me? Do I think this guy's going to fight till death to make his project successful? And then if he's in the right industry, bingo. I got an industry where I have a thesis, I have a conviction, bingo, I'm investing. And the truth is, I've made, you know, recently, I don't really like real estate for venture capital. I just don't believe that it's scalable. It's too based on geography. I met this entrepreneur. I love this entrepreneur. Fantastic tier 1 entrepreneur. And I kept telling him, go do something in cyber, energy, you know, secure, any healthcare. And the guy just kept insisting, you know, I like real estate. I like real estate. I'm like, all right. And he did a company in real estate. Honestly, cannot invest. And the same can be true. The same can be said as, if I love the thesis, very convinced with the thesis, but the entrepreneurs to me is mediocre, average, I'm not going to invest. I cannot invest. It's too tempting to invest, but I can't invest. At the end of the day, the fuel is the entrepreneurs we invest in.
Yeah. So you were mentioning something interesting, that you prefer if the founder doesn't email, maybe goes through an LP. So if a founder has a lead angel, maybe it's a better route to go through the lead angel and
For sure.
that way approach you than, you know, going directly.
Yeah.
Would you agree with that?
Yeah, I agree. I think there's a big game these days. I mean, look, every fund is trying to source their own proprietary deal flow. So honestly, if you're a good entrepreneur, you know, onto something interesting, funds will try to reach out to you by email, by LinkedIn, by anyway. So don't email funds. I guess that's an advice I could have.
It's interesting because we spoke to an entrepreneur like who sold his business a few years ago to Thomas Bravo. But so it wasn't now. So maybe it's an evolution of the scene in Europe. But what he was saying is like, when he started building and when he was on to something, he started getting inbounds from investors, but 95% of them were US. So essentially, he said for US investors, it was really in their DNA to be ultra proactive, and essentially hand down like the next thing. But he was based in Belgium. So in Belgium, in France, in Germany, they were not doing this at all. So you needed to be the one going to them. So this has completely changed, or?
Completely changed. I mean, that's the beauty about Europe, is it has become a lot more professional. And I think we're seeing like the first entrepreneurs coming back to market, you know, the entrepreneurs who sold their business coming back to market. So there's a full first cycle where European funds have become a lot more professional on that. Yeah.
Okay, interesting. And so maybe to get back to more like modern news. So, I mean, you're going to San Francisco. I mean, why are you doing this? Does it mean you will stop essentially hunting down for the next unicorn? Are you going to focus your time on, helping your portfolio go to the US? I mean, what's your role going to be? And I think you just got someone new within the team quite recently, a new partner
Yeah, we have
on board,
Marie.
Marie, if I'm not
Yeah,
mistaken.
Marie, who sold her business to Twitter in the US, which so to highlight this thesis of we're investing in entrepreneurs who scale to the US. And she's based between Paris and London, so it's a different animal. But the reason why I'm going to San Francisco, and I'll tell you in 5 easy points. First one is it's definitely I wouldn't say a game changer, but it is an advantage when you're in a competitive deal and you're fighting against other European funds. Two is what you said, Thomas, is to help our companies move to the US. The truth is, it's been 3 years. We keep telling your company, move to the US, go, go, go. And they're like, okay, but which city do I go to? Which lawyer do I talk to? Which accountant do I talk to? And we didn't have the answer. And we're like, okay, we keep telling those guys, move to San Francisco. We're not even there. Let's show them that we can do it. The third one is, I think there's not enough, we mentioned it quickly, but there's not enough capital in Europe, and especially not enough deep tech capital. And so I need to create a network of deep tech funds in the US who are familiar, who could be fine with investing in Europe. And I could say, and I need to create these relationships so that I can show them these are my portfolio companies. If you like photonics, oh, I have Encoden. You should talk to Encoden. They're great. So that's the third one. I think that's a very important one. It's one you cannot do out of France. We try to do it out of France. We traveled to San Francisco, we traveled to New York. We went to Slush in Helsinki, the master conference of VCs. And so you get, relationships, but it's not as like tight as I'm in San Francisco every day. I'm going to the same meetings, the same conferences, the same. The fourth one is a stat I didn't disclose earlier. I thought of disclosing, but 90% of like acquisition above 300 million typically comes from an American-based company acquirer. Once you know this, you guys are familiar with the M&A world. No company is going to buy another company they've met 2 weeks ago. Company will acquire a smaller company they've known them for 12 months, 24 months. And so our startups, if 90% will get acquired by US acquirer, they need to be in the US facing US clients, facing US acquirers. And so my job will be to create this network too. So there's a lot of serendipity in there, even though I'm going to try to structure it, but I need to be in those meetings, with the corp dev of Samsung, the corp dev of Apple, the corp dev of NVIDIA. I keep mentioning those names, but those are the big names right now. And I don't know, maybe the NVIDIA guy is going to say, you know what? We don't believe in photonics anymore. We believe in quantum. Oh, that's funny you mentioned that. I got 2 companies in my portfolio. They're coming to San Francisco in 2 months. I'd love for you to meet with them. Are you interested? So that's my fourth one. And my fifth one, we're not fundraising at the moment. The fund is closed. Fund 1 is closed. Eventually there'll be a fund 2. But I think it's important to meet future potential LPs with nothing to sell. Because the reason why I think it's important to meet American LPs is for my second fund, for our second fund, if they've invested, they'll be a lot more incentivized to help the companies who are moving to the US. They'll be like, okay, you know what? I've invested in this company. I've invested in this fund. Let me make sure this is a success. Let me make sure the startup is a success if they're asking for my help. And so I think those are the 5 reasons why we want to open an office there and why I'll be there. Sorry, really quickly to answer your last question. My job will be to keep investing in France. My job will be to keep meeting entrepreneurs in France. And so I'm flying back a lot to France. I plan to go back in March, in April, and May. But my days in San Francisco will be spent in the morning meeting some entrepreneurs, in the afternoon doing all this work of local networking.
Okay. Yeah, still pushing the portfolio further to the US, which is
Exactly.
I wish you all the best. Maybe we can close on that note. Really, it's again. I'm super happy for you because it means things are going in the right direction. I'm also sad because you'll be even further away. But yeah, Augustin, thank you so much.
we should film the next podcast in our office in San Francisco. We have a nice view of the city. So when you guys,
sure, but yeah, let's do this. Let's do that. So we'll change the red wall for a sunny sunny day in San Francisco.
sounds
look,
good.
thank you again. It was great to have you with us today, Markus. A pleasure to share that moment.
Thanks, Augustin.
One more time.
Thank you
Cheers.
guys. Thank you so much.
Bye.